Everybody, welcome to the Trading Setup channel. My name is Nico and we're going to be doing some trading today. In today's video, we're going to be looking at the Alligator Indicator. The Alligator Indicator is a trend indicator which helps us to locate trends. Knowing when the market is trending and when the market is ranging gives us an advantage in the sense of if the market is strongly trending, we know we can go in the direction of the trend, and when the market is ranging, we know that we have to be careful and not take trades expecting the market to move while it's ranging. So today we're going to look at the Alligator Indicator, what it's made up of, what it is showing us, and then we're also going to look at 4 different ways we can use the alligator as part of 4 different strategies to find entries in different market conditions. Okay, let's jump into it. As always, before we can use any tools, we need to know what these tools does, what they are made up of, and what data they are showing us. Remember, any indicator that you use on your chart, you need to understand that it's showing you specific data. And if you don't know what kind of data the indicator is showing you, you will not be able to use the indicator efficiently, and most of your trades will be based on guesses, and guessing is a bad strategy. What is the alligator made up of? The alligator is made up of 3 smooth moving averages. These are simple moving averages. Traditionally, it consists of a 5, 8, and 13 period smooth moving average. So the 5 period moving average, which is the lips, they are smoothed by 3 candles or 3 bars. Teeth, which is a 8 period moving average, is smoothed by 5 bars. Jaw is the 13 moving average period, and that is smoothed by 8 bars. 4 states of the alligator. The first will be sleeping. We refer to sleeping when the lines convergence or when they're intertwined. That's when the market is ranging with no clear trend. The second state is waking. That is when the jaw, the lips, and the teeth starts opening up, and this is I suspect this is where the name alligator comes from, but it starts opening up, and you can imagine an alligator's mouth. They lie in the sun the whole day with their mouths open, so that is what it looks like. So that is the waking moment. Then we've got the feeding moment. That's when these lines are already open, but they're opening more. Right, so it's like it's going to take a big chunk of food. The last period is where I believe it's called resting as well. That's when the jaw starts closing. Okay, so we've got sleeping or ranging market. We've got the breakouts, or the start of a trend when it's the waking period, when basically the mouth starts opening. Then we have the feeding period. That's when the market is in a very strong trend. This is ideal circumstances for traders, is when that mouth is really open and the market is moving in a strong trend. Let's go to the charts, and then we look at a few practical examples, and we'll also look at the 4 different states of what it looks like when the alligator is in those states. On my main chart here, I've got the Alligator Loaded. This will be, the green line will be your 5 moving, your lips, or the 5 period moving average. The brown line here is the teeth, and that's the 8 period moving average, and then the blue line would be the jaw, and that's the 13 moving average period. This will be a sleeping period where the lines are intertwined and there's no clear direction. The lines are crossing the whole time, but they're not opening up really. This is what we call the waking, where we were sleeping for a bit, and then as we can see, the market was ranging in here, and then we had a breakout here. Okay, so when the breakout happened, the jaw started opening up, and then as we progressed along the trend, these lines really started opening up quite a bit, and that would be the feeding period, or what's the word, and then this will be where it closes again, where the market goes into the moving averages are intertwining again. One of the most common ways to use the alligator is using it as a breakout strategy. We're going to use each one of these for a different strategy. I just loaded all 3 of them because it makes it easier for us. So what we're going to look for is areas like this, where the market was ranging, and then all of a sudden the alligator opened up and the market broke the range. We were ranging in this area, price kept hitting this area here, this level there, and kept failing, and alligator closed. But when it broke through, the alligator jaw started opening up. Remember also that this is a trend indicator, and it is a lagging indicator. We do not take trades simply because the lines cross. We do need, this is one of those indicators you definitely can't use by itself. And keep that in mind. We cannot simply take trades when the alligator just starts opening. You're going to get a lot of false positives like these, And oftentimes, because it's a lagging indicator, this by the time you take the trade on the cross, it's going to be too late, and we could be in a this is a perfect example of what a range looks like, and how a range would have nailed you if you were trading crosses. If you just want to trade the crosses of the alligator, by the time these cross here, even on the first cross, and you go for a sell, the market is already turning. Same would have happened here. If you took a sell, the market was on support and it got pushed back. Please don't use the alligator by itself. It is a great tool when combined with other indicators, but it's really not something, because it's lagging, you really can't use it by itself. The breakout here, when the alligator started really opening up, we can see that the average true range started climbing. When this happens, we can go in the direction of the break. Okay, so we want to look for areas where the market is basically, where price is ranging, and then the breakout will be once we identify that alligator is opening up, that the mouth is opening up. When this happens and our average true range starts climbing, we can go in the direction of the trend. That confirms to us that a new trend is being established. We can just go along with it. So that's one way to use it, and this is one of the most popular ways that people actually use this. We can look at this. We might actually have a nice setup here forming. We'll keep an eye on this. Alligator started opening up. We are still very much in a downwards position, but we might see a breakout here. If my ATR my average true range indicator starts climbing now, we can go in the direction of the trend. If it does start climbing, we know that we might probably in the beginning of a new bullish trend, and we can just take a trade in the direction of this trend. You do have to wait for it to happen though. We don't predict anything. I've said numerous times before, it's impossible to predict the market. So we cannot predict what price is doing, but we can follow what price is doing. So we just need to wait and see what is price doing, and once it shows us that it is going into a trend, we can take a trade in the direction of the trend, but we do need to wait for price to show us that it is actually moving upwards. At the moment, it's really struggling to break this level. We are in a downwards move. If we draw a trend line off that hook there, this could be very well be a fake break as well. Okay, my ATR is still very low. The time to risk taking a trade, simply because the alligator has crossed. As I said earlier, it's not a very good indicator to use by itself. It's a brilliant indicator to find especially the beginnings of trends, and also to identify market ranges, but especially the trend part of it. Once you have a well-defined trend or a well-established trend, it's very easy to just wait for retracements and then find ways to enter or reasons to enter the market on those retracements, and then just continue with the direction of the trend. And this is a good example why I say we have to wait for indicators to show us that this is actually happening. At the moment, we are still very much in a market is still ranging. There is no solid direction at the moment. There is no solid trend at this moment here. So we do have to wait for our indicators to show us if the ATR, we do in this case here, specific case, we have to wait for the ATR to start climbing. If it doesn't, we cannot take the trade. Let's look at the second strategy to use the alligator with. We're going to look for areas. If the RSI is moving above the 50 line, price is considered bullish, and if it's moving below the 50 line, price is considered bearish. So if we look at areas where the RSI where we find crosses, when the alligator crossed downwards here, even though it was ranging, alligator crossed downwards, my RSI has been bearish already, and we could have taken a 5-minute sell here because my RSI confirmed the direction. It was bearish. Same way actually that this is at the moment. We had the cross and my RSI is still very much bearish. We should actually be able to take a trade here, but I still don't like it. We still haven't broken the resistance level here. I'm just going to wait for that, but I suspect we're going to see a trade. Another thing to keep in mind as well, because the alligator consists of moving averages, these can also be used as dynamic support and resistance areas, and you're going to see this happen quite often. This was a great example where price came back and it just retested the support line there of the lips. The alligator can be used for dynamic and support and resistance areas as well, and quite often when this breaks and it comes back to retest the alligator, you will find that this happens. Where the RSI, for example, after the break, the RSI went bullish, came back to retest the alligator, and the RSI just bounced off the 50 middle line and continued to remain bullish, bearish if it's below. And these are excellent areas to take new positions. In this case, buy trade. Another way we can use this, or another way that the alligator is, people like to use the alligator, is using it alongside the MACD. Here's an example of how we would use the MACD. We had a bullish movement here. The MACD line was above the signal line. It dipped below in this area here, but the alligator remained bullish. The alligator still was opened upwards in a bullish position. And once the MACD crossed upwards again, that would have been a signal for a buy trade. There's a nice example here as well. We can look for areas where the signal MACD and the signal line crosses and then crosses back in the direction of the alligator. We're going to take the trades. We will never take the sell there. When the alligator is looking like, in such a strong bearish, we will not take the downwards cross because that's not a sell. Chances of winning a sell is very, very low, but if it crosses back upwards, we do have a very decent chance to actually win the trade that we take. So that's also another strategy way that people use it. So we were bearish, MACD crossed upwards, so we could have taken a sell here, either on this candle or on this candle. We could have taken 5-minute trades, they would have been good. And then also this was a very faint signal here, but it did cross upwards for a second and crossed back on the very next candle, and we could have taken a continuation trade there. More motivation for this would have been the fact that the RSI was well below the 50 middle line, and also my ATR was climbing. My average true range was climbing. That's the third way that we can use the alligator to find entries. The last way that we can use the alligator, which is one of my methods that I like, especially on the short periods, is finding areas where price is actually ranging instead of areas where we go into a trend. And for this, we use the ADX. So what we want to do is we want to identify areas like this where the market is ranging. Then what we're going to look for is ADX spikes. Let's change the colors here. Okay, so we're going to make the ADX yellow. My plus DI, we're going to make green, and we're going to make DI minus, we're going to make red. Okay, so when the DI minus is dominant, we're moving downwards, and when the DI plus is dominant, we're moving in a bullish direction. So what we want to look for is in areas where the market is ranging, and we can identify these areas using support and resistance like this. Let's move this one here. Okay, so we can clearly see that this is a very strong level. Always remember, support and resistance will never just be a single price, it's always an area. Okay, so that will be the support area, the area between those two lines there. Once this begins, you can actually start drawing in your support and resistance. In this case, we would have drawn it like this because this was our low point here. What we want to look for is areas where the DI spikes. We can put this, for example, also on the most recent last low. We can look for areas where the ADX gives us spikes. The ADX is really effective in ranging markets, especially. The DI spikes is effective in ranging markets. If we get a very big DI spike with a relatively low ADX, it tells us that the market isn't trending, and these are the areas where I want to take reversal trades. Okay, so if we look at where this big green candle here, or this big green spike here, if I took a sell there for a minute, it would have been 1, 2, 3, 4, 5, 6. It would have closed here. So that was a good trade. Same goes for the DI spike on the red candle, which was close to my support. Would have been 1, 2, 3, 4, 5, 6. Depending on where I got in, should have been a good trade as well. There's 4 ways that we can use the alligator to find entries while trading. It's very important to remember that the alligator is a trend indicator, and secondly, it is a lagging indicator. It's a pretty bad idea to use this by itself, but it's a great indicator when we combine it with other indicators. There's so many possible ways you can use this. We just looked at 4 of the more popular ones today, but there's a lot of ways you can use this. That's it for today. Trade smart and trade safe. Cheers.